This is Matthew Cratter from Trader University, and today I want to talk about the U.S. recession and whether stocks will be crashing as part of this. And the general question here, the larger question that I've been getting, is how should you trade a recession report? What should you do when they officially announce that the U.S. has been in a recession? Again, this is not investment advice, but this is based on my experience living through the last 3 recessions in the U.S. It looks like we're almost certainly in a recession now in the U.S. The revised numbers for real GDP from the first quarter of 2022 came in negative, and the economy actually shrank 1.6%. Here's the report from the BEA, which we will be talking about. Now, what is a recession? In the U.S., a recession is defined as, quote, a significant decline in economic activity spread across the market lasting more than a few months, normally visible in real GDP, as we saw, which was shrinking, real income, employment, industrial production, and wholesale retail sales. In the UK, it's defined as negative economic growth for 2 consecutive quarters. Sometimes it's defined in the same way in the US, but the group that really gets to define it in the US is something called the NBER, the National Bureau of Economic Research. And this is what they specialize in, and they will come out and tell us whether and when the U.S. has been in a recession. Now, here's the really important point of this video. You should not wait until a recession is officially called by economists. Economists in these sort of economic announcements are actually a trailing indicator, not a forward in time indicator. Because at the point that the recession is officially announced and called by NBER, at that point, most of the damage will have already been done to asset prices, to stock prices, to Bitcoin prices, etc. And this is because the markets are forward-looking. They try to incorporate all the available information right now. They don't need to wait for the government or some private organization to announce something about the economy. Markets are forward-looking. They're always trying to skate to where the puck is going to be, to use this Wayne Gretzky metaphor that I like so much, not where the puck is right now. And we're going to go through and look at a couple different recessions to show you how this is true. But in the meantime, if you could like and subscribe to this video, that would really help to support the channel. So here's an announcement from the National Bureau of Economic Research. This is from December 1st of 2008, announcing that the U.S. has been in a recession. So again, this is December 1st, 2008 that it was announced, and the NBER announced that the recession had been going on since the previous December, since December of 2007. And so if we take a look at where the recession actually started, it started somewhere up here, December 2007. This is a chart of the S&P 500. And when it was finally announced by NBER, it was it was right down here. So most of the damage had already happened. We had the collapse of all the subprime structures and the bankruptcy of the U.S. banking system needing to be bailed out by the Fed. But we can see here, once the recession was officially announced, a year later, again, this is a trailing indicator, most of the damage had already been priced. And there's one small leg down here in March of 2009, but most of the damage had already been done by the time we got the official recession announcement. Something similar happened in the 2001 recession. We got the announcement from NBER that we got this announcement in November of 2001 that the recession had begun in March of 2001. So this was interesting. The recession began really as a result of the dot-com implosion, and the recession actually started even before the events of September 11th. So this announcement was in November of 2001, saying that the downturn, the recession, began in March of 2001. We can see in March of 2001 where stocks were. They were roughly, on the S&P, they were roughly here. And when we got the announcement in November of 2001, it was somewhere right here. So the bulk of the sell-off had happened, maybe 2/3 of it. There was still, in this case, one more leg down. This was a very long bear market, much longer than a lot of bear markets that we've seen. But we can see at that point that NBER announced it, there was already a lot of the damage had been done. Not all of the damage in this case, but just call it 2/3 of the damage. So we can go through and look at, this is from the Wiki article on recessions in the U.S. We can take a look at how long each of these recessions lasted. So the one we were just talking about in 2001, this was an 8-month recession from March of 2001 to November of 2001. The next one, of course, was the Great Recession, which was triggered by the housing bubble popping and, as we said, all the subprime structures imploding. That one lasted from December 2007 to June 2009. This was a much longer, more protracted downturn that affected more people in the economy. The implosion of the dot-com and the S&P high valuations in the early 2000s didn't affect the general economy as much as the whole banking system being affected, plus the value of everyone's home. So this was a much longer recession, 1 year and 6 months. And then that was basically it until we had the what they call the COVID-19 recession, which was very, very short. It was declared to be this by NBER, but as we know, it's quite short, February 2020 to April of 2020, just a 2-month recession. And one of the reasons that this was so short, of course, was the Fed came out and all the global central banks came out and turned on the money printers at very, very high speed. So what's happening in 2022? Well, in 2022, the recession is probably already here. It may have started as early as December of 2021 or even November of 2021, which is approximately when Bitcoin peaked as well. This current recession has been caused by the Fed's tightening of monetary policy, trying to roll off their balance sheet, shrink their balance sheet, and raising interest rates and jawboning higher future interest rates, and this spillover effect of this hawkish monetary policy on global markets and global economies. The other piece, of course, is the very high, persistently high energy prices caused by a lack of long-term investment, plus all of the short-term catalysts of the Russian invasion of Ukraine. There's some other signs that we're in recession. A lot of people look at the University of Michigan, the consumer confidence numbers, which are basically off a cliff over the last couple months. And of course, a lot of this is just people becoming pessimistic about the future because food prices are so high and fuel prices are so high. And now we're, of course, beginning to see layoffs as well in certain industries. So this is very bad for consumer sentiment. This tends to be sort of almost concurrent with stock prices going down as consumer sentiment. As this index declines, so do stock prices in real time. Another index that people look at to try to get a forward look at recessions is the PMI, which is put out by the ISM, the Institute for Supply Management. We'll get a new number on this in tomorrow morning, I believe, July 1st. It's usually the first of the month for the manufacturing ISM, and then the third of the month for the services ISM. But if we take a look at what this is showing us, this tends to indicate that that the economy is contracting when it's trading below. The number people say is below 50. You can take a look at this chart, which I'll link to below, and you can see for yourself it's usually a little bit lower than that, somewhere down here, and that would capture the beginning of the 2001 recession as well as the 2008 recession. We're still well above this level, but we can be pretty sure tomorrow that this will have deteriorated and we may actually be below 50, which is an indicator of a manufacturing contraction and thus signals a more general contraction in the economy. So as we said, the recession is almost certainly here, already here. We've had this huge sell-off in stocks, really for tech stocks, for things like the ARK stocks, since call it February of 2021. So a lot of this has already gotten priced in. Where do we go from here? I think a lot of that really just depends on these lovely creatures. This is the world we live in, where just a small committee of unelected people get to determine the short-term course of the U.S. economy. So if they turn the money printers back on, if they cry uncle and do it, we could have something very similar to what happened in March of 2020. Again, this has already gone on much longer. We've had this huge drawdown in stocks, but we can see the recovery. Here is the recession was February 2020 right here, down to, by the time it ended in April of 2020, the stock market had already bottomed. And by the time the ISM, by the time NBER announced it, they announced on July 19th that the U.S. economy had been in a recession in the previous year. So July 19th, 2021, somewhere over here, this is where the stock market was when they announced that the U.S. had been in a recession. Here's where the recession actually was. So again, these economic numbers, they're very, very highly lagged. And by the time you hear the announcement that the U.S. has been in a recession, you almost certainly want to have already been long stocks and stock indices and Bitcoin. At this point in time, though, everything really depends on how the Fed reacts, how quickly things break. and also what the inflation numbers look like going forward. I talk a little bit about this in yesterday's video, which I'll link to below. And I just wanted to point out as well, since YouTube seems to have changed this for a lot of people, including myself, if you want to get a list of all the links that I referred to in the video, it's in the description notes, which used to be very visible, but now they're less visible. You have to go down here right near the date and under the title of the video and click open description, and it'll pop up on the right hand side here. You'll see a list. You'll first see a summary of what the video is about, which can be helpful. You can decide whether you want to watch it or not, and then as you scroll down, you will see a list of all the links that I refer to, so you can check the data yourself. This is also where I usually link to my paid courses as well, so feel free to check those out and check out my books as well while you're in the description box here. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video, and let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.